The GST, or the Goods and Service Tax, came into being in a midnight session of Parliament 4 years ago. This session in 2017 promised to herald a new regime. In fact, back in those days, the GST was expected to do a whole host of things, from increasing perhaps 1 or 2% to the GDP, simplifying a very complicated tax structure, making things cheaper, making ease of business better, you name it, and it was hoped that the GST would fulfill it. 4 years down the line, and in its 5th year, has the GST truly lived up to the expectation of being a good and simple tax as was touted? Let's take a look at this report.
A historic midnight Parliament session brought into existence one of India's most anticipated tax reforms since independence. The Goods and Services Tax, or the GST, came with a promise to change the decade-old landscape of taxation in the country. The tax that was decades in the making was first proposed in the year 2000. It then took 17 years for it to come into existence and was welcomed as a good and simple tax that would usher the era of one nation, one tax. But 4 years later, have those promises been kept, is the big question. The GST has 1,216 items divided under 4 key tax slabs of 5%, 12%, 18% and 28%. Additionally, there are zero-rated commodities and different rates for gold and semi-precious stones. 80% of goods and services fall under the 18 and 12% slabs, where the bulk of GST revenues come from. GST accounts for 35% of the centre's gross tax revenues and 44% of the revenue pool for states. Items like fuel and alcohol are still excluded from the GST. Before GST, each state had different forms and processes for taxpayers. GST brought in a uniform process of reducing the total number of forms to 12 from 495. The Finance Ministry says a total of 1,269 crore invoices have been uploaded, 19 crore payment transactions made, and returns worth 67.7 crores filed by 1.28 crore registered taxpayers in the past 4 years. But beyond the numbers, has GST simplified the lives of ordinary Indians? While GST has managed to ease the compliance burden, digitize the filing and return processes, and increase predictability for taxpayers, a whole host of issues remain pending. States that were to be compensated for the loss of revenues for 5 years often complain of being shortchanged and want an extension in compensation. Once a bipartisan platform, the GST Council has recently become the battleground for disagreements between the ruling and opposition parties. While revenues have been steadily increasing, they are nowhere close to what was expected, in part due to the economic slowdown followed by the pandemic. Different tax slabs and additional cesses to boost revenues means the dream of one nation, one tax is still far away. Despite these hurdles, GST has definitely eased a complex system to some degree. Like other landmark reforms, 4 years on, it is still work in progress. Bureau Report, ET Now.
All right, to speak more on this, I'm joined now by a very special panel of speakers. We've tried to keep every aspect of the stakeholders of the GST in this conversation. So pleased to welcome PTR Thiagarajan, the Finance Minister of Tamil Nadu, Mr. T.S. Singh Deo, Cabinet Minister at Chhattisgarh, joining us on the show, as is Dr. Haseeb Drabu, former Finance Minister of Jammu and Kashmir and one of the original members of the GST Council, MS Mani, partner Deloitte India, also on the show. Welcome, gentlemen, and thank you so much for speaking with us. Let me begin with your take, Mr. Thiagarajan, on how you look at the GST Council and what is happening right now. You have, in the recent past, commented on how you think there's time for a change, that there needs to be more back and forth of exchange. As a relatively new Finance Minister of the state of Tamil Nadu, how do you find the platform of the GST Council, and what is your view on its completion of 4 years?
I came, let me just say maybe one more thing. In 2017, before the law was passed, a friend of mine, Praveen Chakravarti, and I wrote a piece in the Mint newspaper, and we said our concern primarily is about the loss of ability of states to generate revenues as per their government's wishes. This lack of freedom in a country that's already hugely centralized, more so than almost any other country in the world, certainly any other large country in the world. What are we giving up? There's all these upsides promised, but what are we giving up? So if I start from that perspective, I would say a point like this for reflection, it shows me, A, that we have really lost all the things we thought we were going to lose, and realized complexities that we didn't expect to realize in terms of executional problems and kind of operational problems and decision-making trouble. And the reverse is that the promised benefits have been hard to find. And neither have we seen buoyancy in taxes, nor have we seen any great ease of doing business, nor have we really seen a fundamental transformation in the volume of commerce that ease of doing business is supposed to produce in terms of increased transactions. So I think that's the basis on which I said, though I'm a relative newcomer, it's a good point to take stock. We are in a crisis. We have seen the consequences of the current system during that crisis. And my worry is that if we don't take a fundamental retooling approach now, that the longer we wait, the more these, by default outcomes become crystallized as if they were rules or norms. And it will be much harder to change in the future. So that would be my comprehensive take on that.
Mr. Deo, when the GST came into being, and the reason why it took so long, in a sense, was the apprehension of states, as the Tamil Nadu Finance Minister has also conveyed. Do you think what has made it even more difficult in the last couple of years is the fact that revenues did not increase as was expected? The plan was that you'd bring in GST and your economy would boom. Quite the reverse happened. There was a slowdown, and then you've had about 18 months of a pandemic. Do you think, in your view, that has worsened the situation and led to this bickering, I would say, between centre and states, especially opposition states?
First off, Tamanna ji, good evening to you. Good evening to all the panelists and all our viewers. And thank you for having me on the show. I was in the opposition when the GST bill was introduced in Chhattisgarh, in the Chhattisgarh Vidhan Sabha. And at that point in time, my political party had given me the responsibility of the leader of the opposition. I was a fairly young in terms of experienced leader of the opposition. And though the UPA was at that point putting forward the GST view, I had expressed in the Vidhan Sabha to the finance minister of the ruling BJP regime that please be very careful. This is a very major step that we are taking away the right to taxing from the states and giving it to the center. The vote share that was being propagated was, let us say, 1/3 would be with the government of India, 2/3 with the states. And any change would come about by 75% of the voting, which meant that nothing could change without the concurrence of the government of India. To surrender the rights of taxation of the states and to put it into the hands of the center to the extent that you cannot change the GST regime without the concurrence of the center was too big a gamble to take, and I was completely uncomfortable on that count from day one. And as things are gradually unfolding today, that aspect is troubling me more and more and more. While Mr. Jaitley was there heading the GST Council, and then we had come into the government. And as the Commercial Tax Minister, I was attending the GST Council. I was very pleasantly surprised by Mr. Jaitley's attitude in managing the council, whereby not a single decision was taken if even one state had an objection. So there was an honest attempt to arrive at a consensus, no matter even if one state of the 31 members of the council had a differing view. Today it's entirely different. Today it is majoritarianism. And this could not have been the conceptualization of the founding fathers of the GST regime. So my, first off, of course, happy birthday to the GST baby. That is okay. But the way things are working is not at all healthy. It's not at all healthy. And everything seems to be taking shades of political nature. If I say something, I am saying something because I am representing a political party. This was not there earlier. One individual state, his or their voice had complete respect of the GST Council, and nothing was decided. Things were deferred till an agreement came for even that one individual. So that aspect, and of course, as far as having one tax rate for the country is concerned, that's okay. But the way it has been implemented, we were to be losers from day one. Chhattisgarh, for example, this is being parochial, not general. But even in the assembly, then I had spoken and told the GST minister, the BJP GST minister, that be careful, you're going to lose. If we are going to go into the consumer point of taxation, Chhattisgarh is a producing state. We'll lose revenue badly. Take care of how you will protect it. And the protection came about with the 14% protected revenue concept. And it hasn't worked. It hasn't worked.
You know, a lot of things actually have not stood the test of time in that sense, and the 14% loss of revenue is one of them. The idea was that states pegged that they would get revenues with a growth of 14% every year, and that's how much they should be compensated for. Dr. Haseeb Drabu, in hindsight, and looking at what happened in the last 4 years, I mean, there's been one event that nobody could have thought of and didn't take place in the last 100 years, but it has come to pass. We've also seen the beginnings of an economic slowdown before the pandemic. In that context, the 14% growth rate figure, does it seem really out of place and needs to be revisited as well?
But let me start off by saying that make a distinction between GST regime and the GST Council. How the GST Council is managed is a separate issue. Reacting to what the Finance Minister of Tamil Nadu said, that there's a loss of the state's autonomy. And I was Finance Minister of J&K, which at that point had autonomy of a different kind, a constitutionally guaranteed autonomy, unprecedented. It was an asymmetric federation where J&K was the most empowered state. We didn't see it like that. In fact, we saw it as sharing of tax sovereignty. And I thought that the center actually lost more or shared its sovereignty more than the states did. If you look at it from that perspective, the center's budget today, the union budget today, is nothing but an expenditure budget. You don't change direct taxes off and on, and you cannot change indirect taxes. And there was a huge thing, which I remember talking to Mr. Jetley about, how are you going to sell this to your own constituency because you have disempowered the center? I wasn't looking so much at the aspect of how the state, because like Mr. Deo said, every single decision was taken by consensus in the GST Council, discussing threadbare, and we had a voice, for instance. I mean, I go back to 1991, the entire economic policy regime of this country was changed, and the states read about it in the next day's paper. Now, you could not change a single rate on a commodity without discussing with states. So in some ways, I'm not really buying into this argument of states' autonomy being compromised. So we came from a position where we saw that there was a kind of a sharing of tax sovereignties where the center had also lost a fair bit of, so I wouldn't put it either or in terms of states' autonomy or center's powers that way. I always felt that this was India's first genuinely federal institution. Planning Commission, Finance Commission, as somebody from Mr. Thiagarajan state once said, that the Finance Commission is a dog that bites the states and barks at the center. It wasn't like that, nor the Planning Commission, for instance. So here we had a first federal institution. How it has panned out, we can discuss. But going back to the origins of how it started, I think there was a very strong case where states had a role way beyond their size in terms of the national economic policy as well. And I thought it was a wonderful way of forming legislative changes on the fly, on the table, in consensus and discussion. How GST Council has functioned now is a different thing. We can discuss it separately. But the architecture of GST itself, in terms of how to design,
fair point.
I thought was very, very fair. And we have gone through phases. Yes, you talk about compensation. I think compensation that time was again a carrot to get states on board. And 14% revenue guarantee, I had objected to it. It's minuted in the minutes also, because it would be impossible to kind of provide for that. It was like an insurance policy.
Yeah.
I, in fact, questioned the GST Council that what if I don't push GST enough? The compensation arose out of this whole thing of saying that in transition to GST, there'll be glitches, there'll be transitions, the revenue that you will lose on that account, not generic revenue losses, not a pandemic-related loss. No, it was very clear this was to be on transition to somehow in the negotiation states, 30 of them looking at the center, it of course panned out differently, and we signed off on a virtual insurance policy for compensation for states. So that's how it was. Let's also look at it in terms of how the GST rollout, it has to be evolutionary. It couldn't have just, first phase was very disruptive. The first phase was disruptive. You disrupted supply chain networks, you disrupted all kinds of stuff. Now, and that's where I agree with Mr. Thiagarajan, now is the time to look at the second phase of GST. And some of the enabling things should have been done, should start happening now. I'm very, very surprised that the Finance Commission actually did not even recognize the entire transition to GST. So it was like they went back to the thing as if GST hadn't happened. Because within the GST regime, the entire center-state transfer mechanisms will have to be altered. And that hasn't been done. It's time to do that now, to begin structural changes and ensure that the disruptive phase now starts a phase of consolidation and efficiency gains.
The GST was referred to as a baby earlier in this conversation. So after its first 4 years, the baby is now walking and needs to start running seamlessly. Mr. Mani, I want you to come in here, and you have seen every twist and turn of the GST. Let's just look at it very simply. GST is here today with some of its faults, some of the things that need to be changed, but on two basic questions. One, are we better off with GST than without? And second, has it fulfilled its basic aim of a uniform tax across the country? There are several slabs now, and then you have cesses, and then you have various configurations. Do you think it is truly a simple tax as it was meant to be?
Let me look at it only from a business perspective. What is it meant for Indian businesses? Now, I'll put it in two buckets. The first bucket is what does it mean for manufacturers and what does it mean for service providers? And the reason why I'm doing this is because GST has dealt with manufacturers differently and service providers differently. So a manufacturer of goods in the past, pre-GST, had to grapple with a battery of taxes. There was a central excise duty, which was a central tax, where the rates used to change every year as part of the union budget. Each state had a value-added tax. And when I say each state, it was all 29 states. Those rates used to change every year during the state budgets. So if there is a manufacturer who supplies goods all across the country, the manufacturer had to deal with 29 state tax rates to determine the costing and pricing. Again, when we talk of the state tax rates, in some of the states, it was not one tax. There was a surcharge, there was an additional tax, and there were other taxes which were embedded with it. So for a manufacturer to move from a situation of multiple taxes across states, various cesses and surcharges applied by various states, which keep changing from year to year. In some states it might change, some states it would not change, to a situation where the manufacturer today has to deal with one rate of tax for one product across the country, I would say to manufacturers, this has been excellent. So a manufacturer of any product today does not need to worry about how he is going to price his products, except the logistic cost, which varies depending on the state of manufacture and the state of supply. Tax is no longer a way. Now, what happens to service providers? Service providers were in a different league altogether. Now, they were covered only by the central tax called service tax. And the service tax mandated that a service provider takes one registration for his business in the whole country, pays one amount of tax, files one return. That return again used to be once in 6 months. It was not a monthly return. So there were 2 returns per year for service providers. with one registration pan-India. That has completely been altered. So all service providers, whether it is banks or insurance or telecom or software, now need to obtain a registration in every state they operate. Most of these companies operate in all the 31 states. So they have 31 registrations. The return filings is monthly. So there are 31 into 12 returns which need to be filed. So for service providers, I guess it has become a little more complex than what it was before. For manufacturers, it has become far simpler. But when you combine the two and you say that, look, as a country, is this something which is good? I would say it has been very, very good, because even for service providers, it's been one rate. Although they have to take a registration in each state, they have to do a return filing in each state. The rates are not different. The rate is one. We do have a few slabs even now. So we still have a 5%, a 12%, an 18%, and a 28%. The cess, as you are aware, is for very few products. It's not all across that every product attracts a cess. Now, should we do away with these 4 slabs and have maybe 3 slabs? Yes, of course, we should do that over a period of time. But is the tax overall more complex than the earlier tax regime? I guess most businesses would say no. For manufacturers would say it is far less complex. Service providers would say, look, it is not complexity.
What about money? What about, I'm sorry, I just want to come in with a quick follow-up here. Sorry, if I can just come up with a quick follow-up here. You are saying it's less complex for producers, maybe more for service providers. What about smaller businesses? I know beyond a certain limit, businesses don't have to file GST. Then you have the composition scheme where they can give one standard rate. I know all of those thresholds exist. But for smaller businesses who are on that, verge of turning into a slightly bigger business, who cross that threshold, the compliance burden, the cost of compliance is quite troublesome, you would agree. Especially when in some cases you become liable or responsible for whether your vendor is compliant or not.
Yeah, you're absolutely right. So for SMEs and MSMEs, it has been a fairly difficult journey to navigate. And it's been difficult because of 2 reasons. Look, the purpose of GST was to broaden the tax base. And if we have to broaden the tax base, we have to get more and more people into the net. That's how, over a period of time, we have a rate of tax that is fair to everyone. So because of that, we have had to cover a lot of SMEs and MSMEs who have fallen into the tax net. Now, the complexity for them arises from the fact, possibly, that the entire compliance process in GST is a digitized process. There are no manual processes. Now, when you have a digitized process, it is very convenient to certain set of people because you can get everything done sitting with, a phone or a laptop. But for certain set of people who may not be tech savvy, yes, it would be a little difficult for them on the compliance side.
That is from the point of view of businesses. Let's come back to the basic issue of, is it half done going forward? Ms. Thiagarajan, what would you like to see changing? You talked about retooling the GST right now, and you're talking from the state's perspective. Right now, opposition states are conveying that they are not feeling included, that their voice is not heard. Apart from that, do you still think that there's merit in going back to the earlier system so that a state can tax more? Isn't this, in a sense, simplifying the process?
So this notion that somehow this is increasing tax sovereignty is mind-boggling to me. Right? 100% of direct taxation power lies with the union government. All we had was indirect taxation power. Now that has also been taken away from us. It is not my fault if the union happens to decide not to do anything about its direct taxation power, decides to cut down its progressive taxation and make it more unfair by going to indirect taxation. These are not things that are within our control. In the Constitution, 100% of direct taxation lies with the union. In any reasonable tax country, you must take progressive taxation like direct taxation, which is 60% of all taxation. 60% of all taxation power lies with the union. Only 40% was with me. Now that also is gone. We have these classic case studies that we pointed out, that when Mr. MGR, who's not even my party, who's opposition party, decided to do a free noon meal scheme for every student in every school, the way he funded it was by raising the sales tax by 1%. I don't have that luxury anymore. What if I decide I want to give free health for everybody and raise another 10,000 crores? I don't have the luxury anymore. I'm a relatively well-to-do state. So there are many, many issues here. The biggest issue of which is that those states like us and Maharashtra and Karnataka and Gujarat and maybe even Chhattisgarh, Mr. Singh Deo will tell us, who are not that dependent. We are huge net contributors of taxes to the union. If we pay a rupee in taxes, the average Tamilian gets back 30 or 35 paisa. 70-75% of our budget is state-owned revenues, and we only get 20-25% from the union. We are upset. We have lost our rights. We have lost our independence. Right? Now, those states which get 50, 70, 80, 90% of their budgets from the union may feel they have nothing to start with anyway. So they say, no problem. We have not lost anything. We have gained sovereignty. Maybe we have lost. Let's be very clear about that. Number two, I don't understand what country Mr. Mani lives in if he says that cesses are a small part of what? 23% of the union government's revenues come from cesses. It used to be below 10% in the UPA. So 23% of the total revenues are not divisible to the states. They are being expropriated into an indivisible pool. How is that fair to us? So we have fundamental problems with the notion of fairness, with the direction of taxation, and with the ratio of indirect regressive taxes to direct progressive taxes. We are now, let me put it simply, we are being dragged down to the lowest common denominator of an inefficient and ill-formed system. Now you come to the actual GST Council. I was not there. I didn't have the luxury of being a representative when Mr. Jaitley was there. But I can tell you now that the debates are not actually very clear at all. Who has what authority? What item should come for approval? What item should come for ratification? What item should come for information? 72 rate-setting decisions were made by effectively IAS officers in a fitment committee, and were told that we were being told that it's for information. So naturally, finance ministers of certain states said, how are we then, what are we here for? Why were we elected by the people? Why did we come to this council? And this council, incidentally, is only a advisory body. Let's say that we all agree that something is going to happen in the council. It doesn't become law overnight. We have to go back. The parliament has to pass a bill. We have to come back and amend the Tamil Nadu commercial tax bill or the tax law. Only then it becomes execution, because democracy is still democracy. Elected representatives have to go through a process, right? You cannot have a bunch of people sit as Now the question is which people? Is it even elected members who are ministers, or is it IAS officers who sit in a subcommittee? So my fundamental question, and it's on a document that was sent to all states, is we are not even clear which powers reside with whom, how they should be exercised, and how they come to fruition. Why don't we start with cleaning that up first?
Okay. I think you are responding to comments made by both Dr. Drabu and Mani. They should have a chance to reply to your observations. Dr. Drabu, do you want to go first?
First, of course, I think there is an interstate issue that whether it's Tamil Nadu or it's other states, because Tamil Nadu has its own state-owned revenues are high. But to call GST Council an advisory body is a bit off. It is a decision-making body, and it did bring about huge legislative changes, unprecedented in any tax regime. And when we were talking of tax sovereignty, we were talking of indirect taxes, because let's not blame GST for that. The congenital imbalance rests in the Constitution of India. It is not a creation of the GST Council. So the battle that Mr. Thiagarajan wants to fight should be about the center-state relations, the way Finance Commission, for instance, behaved in a completely irrational manner. Let's not tag that onto GST. The imbalance, where he's right about direct taxes, is a creation of the Constitution of India. It is not a creation of GST. We are looking at GST as a tax regime, as an economic policy regime, which had certain objectives, some of which have been fulfilled, some of which have not been fulfilled. Take two examples. One, Mani talked about widening tax base. What are we talking of? 48% of the tax today is collected from 0.1% of the GSTians. 48%. 77% of GSTN is coming from 7% of the taxpayers. 0.52% of the total GSTN taxpayers contribute 64% of total collections. It hasn't widened. Those are issues that should come up now, because that's what you need now. You have had a disruptive phase. Now try and see what has happened in the structure of the economy that we had. For instance, the biggest disruption today was to break off the supply chain networks with the small units, because you were not into GST and you didn't implement the reverse charge mechanism properly. Now, this is the time where people like Mr. Thiagarajan should talk about and say, these are the big issues, not use the congenital constitutional imbalance in the fiscal federal system. Fiscal federalism or federalism doesn't even occur as a word in the Constitution of India. It's a hugely centralized system. Let's not kind of fool ourselves with that. But there are things that need to be done to the GST as a tax regime. And I agree with Mani, made it a lot simpler. It can be made even more simpler. We have had technology glitches, we have had operational glitches, we haven't implemented now. E-way bills were supposed to be implemented long time back. That has now become e-invoicing. So it is evolving. But what I do want to end up with saying is that you need to rejig the entire system now. Take a look at 4 years, not so much from the constitutional perspective, but from the operational perspective, and make it a relevant thing. For instance, how can you live with the fact that 48% of tax is coming from 0.1% payers? Let's widen the tax base and see. Once you have a buoyant system, once you get more revenue...
That was one of the promises.
Sorry?
Yeah, that was one of the promises, that we'll widen the tax. That was one of the promises of GST, that we'll widen the tax base, that tax evasion will be brought down, that retail prices will be lower. Yeah, so they were...
efficiency gains have come in because you're still doing 1 lakh crore plus with this kind of economic growth. So some plumbing has worked. But what I'm saying is you have to address core issues. That how can you live with the fact that 0.1% of the GSTians and the taxpayers account for 48% of the tax revenues? This is something that nobody's talking about. We need to talk about that and ensure that the base widens, resulting in a formalization of the Indian economy, which is where the 1-2% growth was supposed to come from to GDP that you talked about in the beginning.
Yeah, that was one of the many promises. Mr. Mani, your chance to respond to the points Mr. Thiagarajan made specifically on cess. Are you underplaying the impact on cess, especially on certain categories and certain businesses?
Okay, so Tamanna, my point was in respect of the number of products to which the cess applies, not the collections from the cess. So the number of products to which cess is applied, it's applied only on sin products, which are pan masala and a few others, on aerated beverages, and a lot of automobile products, automobiles of various categories. So my point was very simple, that in the pre-GST regime, each state used to tax a whole host of products under cesses, surcharges, and additional taxes. When you compare with that, we at least now have a fewer number of products which attracts a cess. Now the collections from the cess are more, that is because of the manner in which the cess has been designed. Bear in mind that the discussion that we were having on states being compensated, the compensation for states is expected to come from the cess, and that is the act passed by Parliament. So if the collection in the cess account is lower, that is when there is a problem in how do we compensate states. And if you keep the past 15-16 months aside, prior to that period, the compensation cess fund of India, which was getting collected, even at that point of time, was not completely sufficient to meet the requirements of a 14% year-on-year growth of states. So let me just clarify by saying that I was speaking of the number of products that attract cess, which has significantly gone down in the GST regime, not the amount of cess that is collected.
Okay, I'm going to come to Mr. Deo and we'll move this to a little forward looking. I think everyone agrees that there is some good that has come out of GST. I'm not sure if Mr. Thiagarajan agrees, but overall, there is some good that has come out perhaps of GST. There is a lot more to be done. Mr. Deo, if I could ask you to take this a little forward looking, what would you say are the key 2 or 3 factors that need to be worked on and we need to hammer out to truly make the GST work?
Any tax, what is the purpose of a tax? It generates revenue for that government. Now, if you see 2 governments, the state government and the central government, so is this regime, apart from rationalization of tax rates and getting beyond things like cascading taxes, etc., which may or may not benefit after the GST regime has come in place the consumer, that I really don't have data on. But let us presume that those aspects may be better off. You don't have multiple tax rates. You don't have cascading taxes on various points of the manufacture and sale of the product. Okay, that seems to be okay. But was the purpose of implementing or putting a tax to provide ease of business, or is the purpose of putting a tax to provide revenue to the governments? So if the purpose of a tax is to provide revenue to the governments, then you have to see basically the balance or the imbalance that will come about by this regime. The other aspect is different, whether business benefits or service sector benefits or the consumer benefits, that's another aspect. The main point of a tax is to provide revenue to the government. Now, what is the position vis-a-vis taxes for the government of India? Has it gained? Is there a net tax neutrality that has come about through this regime? Is the government of India getting as much percentage of the taxes, including direct and indirect taxes, etc., or is there an imbalance? Were the states getting as much revenue? Are they getting as much revenue as they were getting earlier? Are different states getting different revenue shares now? After the GST regime has come in place, that needs to be looked into. That is what will decide whether this is a fair system or not. Business, ease of business is one aspect. And as far as cess is concerned, I think what Mr. Thiagarajan was mentioning was not cess on GST goods itself, because that has a time limit. It will go after 5 years. It has been extended to meet out the loan component and the interest on the loan component taken by the government of India, etc., to ensure the 14% protected tax. So that cess on GST items is a temporary thing. The cess, for example, on petroleum products, I think that is what Mr. Thiagarajan was talking about. That is the major share that goes to the government of India, of which there is no devolution through the Finance Commission to the states. So there is what we need to look into. So ease of business, better structures, okay.
Yeah.
But
so let me.
Tax,
Yes. So it's all about revenues for the states, and frankly, this is a time, look, we're also looking at the GST in the backdrop of the pandemic. There's no other way to look at it, where center, state, all units are strapped for revenue. So in that backdrop, Mr. Deo, since you spoke about fuel cesses and taxes, right now that is something which is really pinching. And a lot of experts, economists are saying that you have to reduce the retail prices of fuel to bring some kind of ease to the common man when demand is already subdued, consumer sentiment is already subdued. One of the options that keeps getting talked about is bringing it under the purview of GST. Is that something that you would be agreeable to?
As I'm seeing it, I haven't really gone into it in depth. I'll need to consult other experts too. But as I'm seeing it, today the excise and cess share is very much more than the VAT share. If it is going to become 50-50, the states will certainly benefit. I don't know how it's going to play out. I'm just seeing it very superficially. What are the taxes on a petroleum product? You have the cess, you have the central excise, and you have the state VAT. So the figures that have come out in the media, in the press so far, indicate that the VAT component is far lower than the excise component, and cess is, that goes beyond that. So if it comes into the GST pool, on the face of it, it seems the states will certainly benefit.
Well, that's what the central government is saying, that let the states take the first step. Mr. Thiagarajan, just on the question of bringing fuel into the ambit of GST, fuel and alcohol was kept out. Would you be agreeable to that? It is something which will give some comfort to the common man. 105 rupees, I think, is the price of petrol in Mumbai today. It is, no one is ready to budge, nor are states, nor is centre. What is your view on this?
My views are very clear, but let me just go back a second. I'm not somehow combative in saying everything is wrong. There's nothing in which everything is wrong. There's nothing in which everything is right. Everything is a trade. So I don't have a problem with the notion that GST was run for a good reason and it has yielded some benefits. Of course, nothing is ever all bad. The points that I was making was that everything happens in a milieu, in an environment. I don't get to make decisions as a minister for my state only on one item. As Mr. Singh Deo said, our job is to raise enough revenues. I'm even more quantitative than that. I say I want 10.5% of the GSDP as the state's own revenues. And whatever we used to get was 4% of our GSDP from the center or the union. Now we get down 3. It's okay. Okay, we can make that up. We're a big state. We have big manufacturing, all that. But the fundamental problem is in the kind of execution. And I agree clearly with my colleague from J&K that execution is everything. You and I might have slight differences of opinion or even vast differences of opinion, but if your opinion and your view executes in such a way that we don't have a problem, I can actually live with that. What we have now is an execution problem where we are all seeing a drop in revenues and we are seeing operational complexity. Let's just take the compensation cess for the GST. Just one example. The compensation cess for the GST, the CAG reports actually carried a net positive for the first 2 years. From 17-18 and 18-19, it had an excess of 40-something thousand crores, almost 50,000 crores of excess collection on the cess compared to the compensation that needed to be paid out. But what happened? Much like many of the other cesses that the union government sets, like for Swachh Bharat and Krishi Kalyan and this, that, and everything else, after not spending the money for the purpose it was designated to and not carrying it over to the next year should there be an excess demand compared to collection, they absorb them back into the union revenues without actually redividing them after bringing them back. So you call it a cess, it's supposed to be earmarked for a purpose, you don't use it for that purpose, and then you actually absorb it back and don't share it on the reabsorption. Now you have a problem where the rule seems to work in your favor. Whenever it suits you, it's black, and whenever it suits you, it's white. Because sure enough, when the time comes when compensation is due, incidentally, this compensation system is badly designed if you're looking at macro risk. It is fundamentally badly designed. The only time states are going to need payouts to make up to 14% is if the entire system is actually in funk, in the economy is sunk. Now, if you have idiosyncratic risk that one state had a disaster or one state had a problem, then the system works fine. But when you have a macro problem, of course, when the economy of India is down, then the economy of every state is down. That's only when we need compensation. If it wasn't so, then why was there surplus in the first 2 years? So you have a system that's itself badly designed, then the execution goes even worse than that. So I'm completely clear that we should now going back to your question, why would, and then just to make the numbers very clear, as of today, of the 32 rupees and 90 paisa that the union government levies as taxes on petrol, 31 rupees and 67 paisa is in cess, and only 1 rupee and 38 paisa, 1 rupee 40 paisa, I may be wrong by 5 or 10 paisa, is in excise, right? So at some level, these taxes are not being shared out. That was not true back in 2014 when the UPA finished. It was about 6 rupees something in excise and 3 rupees something or 2 rupees something in cess. So the ratio of excise to cess has completely changed. It's like 4% to 6% excise and 94 to 96% cess, which the union takes and retains.
Right.
And that's especially after this Feb 21 budget. So if I put all of this together, and the fact that the union through GSTN even collects the SGST and then sends it to us when they feel like it, I would be loath to put any product into the GST framework under the current operational model that we have in terms of who actually collects it, where is the point of kind of delivery, on what date is it physically transmitted to us, why is SGST collected by GSTN and transmitted at some date of their choosing, why is it not being collected directly by us? These are all practical operational questions that I have concerns about.
Okay, so there is a lot of, I wouldn't say acrimony, but a lot of questions to go through. The GST Council has its task cut out for it. GST is not going to have an easy time ahead, and the last 4 years hasn't been easy either for the new regime. A lot of twists and turns and changes, working on it on the fly, and that will possibly continue. But yes, it has been a landmark change in the way India taxes. There's no doubt about it. We also must talk about here how Arun Jaitley, the late Mr. Arun Jaitley, made this happen and made center and states come together. Can that process of federalism and cooperation continue is the biggest question of all. I want to thank all of you for joining us on this special coverage this evening.
Thank you.